Just touch on that a little bit for us. Where are those newly created value opportunities at the moment?
Well, John, I think you have to sort of distinguish between a broader outperformance potential that you see in the more cyclical parts of the market, just because they're so very oversold, with some other opportunities that may exist in the cyclical side of things and the value side of things that actually have longer-term growth potential. Now, I see things like energy, like industrials, particularly airlines, as probably being oversold, probably have some runway over the next 12 months, but limits to their long-term growth potential. The really exciting opportunities, I think, are either going to be in materials, particularly if we get an infrastructure package as part of a fiscal bill, either later this week, perhaps, or early next year. But the biggest opportunity I still see out there is financials. It's large cap banks that have gotten just beaten up this year because of loan loss provisions, despite the fact that their credit quality is good, that their balance sheets are extraordinarily well capitalized, and that we expect the yield curve to steepen as we move through the recovery into 2021.
Jack, is that dependent on the Fed allowing it to steepen?
I think it certainly is. I mean, the Fed has to maneuver, at least on the long end of the curve, when it comes to its asset purchase program. But when we look at what's going on at the Fed right now, we are seeing an economy that is almost certainly going to pick up steam, at least in the back half of 2021. Growth expectations rising, inflation expectations rising. And I think the Fed is going to be caught almost in a tricky situation because it's not going to feel comfortable raising short-term interest rates because it has told us through its dot plot that it's not going to until 2023. That forward guidance is increasingly important for Fed policy. And so if it can't move short rates, how does it aim to slow things down or at least keep growth in check? Well, it's going to start working on the long end. It's going to take its foot off the gas when it comes to QE. Maybe it stops purchasing. Maybe it starts selling securities on its balance sheet. This should allow those longer ends to drift, longer end yields rather, to drift higher.
The bias on financials, though, Jack, just quickly, there's a U.S. tilt there over Europe?
I think so. I mean, when it comes to the financial story, I think the U.S. is vastly superior to the European financial story. I mean, you're looking in Europe at a rate environment that is clearly not benign, at a region that is overbanked, that is probably overregulated. I much more lean into those large cap global banks that are based in the United States. Europe has a lot of other exciting cyclical opportunities, John, I think, but financials are one of the trickier ones over there. I'd rather tilt domestically.